There are currently over 5 million limited companies in the United Kingdom. That's a hell of a lot of companies. Now, in this week's I Hate Numbers video, I'm going to explain to you 7 benefits, yes, 7, of being a limited company in the United Kingdom. Now, those benefits that I'm going to be talking about extend outside of the United Kingdom, and many companies incorporated all over the world share many of these features. However, my focus is on the United Kingdom. Take from that what you wish. Hi folks, welcome to another weekly episode of I Hate Numbers. Now this is the channel that's got a mission, and that mission is to help you and your business make more money from your business, not just run a hobby, increase your financial literacy, your financial awareness, save tax, save time, reduce your stress and anxiety, and have the business that you aspire to. Who wouldn't want that? Let's crack on with the video. Now, one of the initial benefits of having a limited company is what's called limited liability. Now, what does that mean exactly? If you are a sole trader or you run your business as an unincorporated partnership, if you run into any financial difficulties, if you run into any legal challenges there, you run the risk of your personal assets being exposed as well. Any potential creditor, any legal action issued against you, then if you don't have enough assets in your business, then your personal assets like your house, your car, your furnishings, and all the rest of it are at risk. And therefore that could be quite a lot to take on. However, when you have a limited company, it's the company itself, which is an artificially created entity, that is the one that bears the legal responsibility. So the company that you create is able to issue contracts, have contracts taken out against it, engage with suppliers, have customers, and any legal issues, any financial problems that may arise will be against the company, and your personal assets are protected. As a side note, folks, by the way, make sure when you actually engage in any contracts that if you give personal guarantees, remember those negate the impact of limited liability. Now, it's worthwhile mentioning, by the way, when we talk about limited liability, the liability will be as a shareholder against any unpaid share capital that you have when the company is created, or if you buy more shares or in the company that you're engaged with. Typically for most startup companies, the share capital, the shares that are issued, there's very little monetary value attached to them, so that liability tends to be quite small. If you're a prospective shareholder coming into a company, your liability is limited to any money that haven't been paid on your share capital. Number 2, and probably the biggest reason it's touted, is the tax benefits that can accrue from having a limited company. The tax opportunities are far greater in terms of the tax planning. How that money can be extracted out of the company towards your personal bank account are much better. The overall rates between you as the business owner, the shareholder, and the company itself, if we look at those combined, are much less than it would be if you were running a business as a sole trader. The differentials are getting smaller, however, there is still a tax advantage to operating as a limited company. What's benefit number 3? Benefit number 3 is effectively about raising funds. Probably not often talked about, but it's still quite powerful. So if you're looking to raise funds for your company, then you have more opportunity, more availability of those options than you would do if you're a sole trader. For example, if you're registered, you can apply for funding under what's called the SEIS scheme, venture capital schemes, enterprise investment schemes. They sound very grandiose, but effectively those offer tax breaks to investors as well as generating funds that are needed for your business growth and moving forward. Those schemes are not available to sole traders or unincorporated companies. So therefore, the ability to raise funds, that mechanism is much better for you, and it gives you greater opportunities, attractive for the investor and attractive for your company. Also, in terms of benefit number 4, you can alter the ownership, the people who participate in your company going forward. If you decide that you wish to have new blood as such, you could issue more shares, have new shareholders coming in. You can appoint new directors to yourself without having to form a partnership arrangement, and that can be very positive for you because business dynamics will change, the business landscape will change as well. Let's go on to our next benefit. Now, in your company, you should be thinking about exit strategy. That exit could be 5 years down the track, 10 years down the track, or 20 years down the track. However, having said that, having a limited company gives you more flexibility. Those shares could be perhaps passed on to your children. You have the opportunity to sell that business. There's something more of substance for a company to be sold than it would be for a sole trader business. You've got the ability to exit, and therefore that's going to be a really positive thing to think about. So that exit strategy that you have, that retirement, that withdrawal from your business, there again, there's tax breaks attached to that, but you've got that greater flexibility if you're running a limited company compared to a sole trader business. Let's just share a couple of other benefits. One of the other benefits is pension planning. Now, pension planning, under current UK rules, are that if you build up a pension pot, then once you get to the age of be eventually 57, you can cash 25% of that tax-free and enjoy that. There's no restriction. Your company can set up a pension scheme for you. It's going to be cheaper for you than using your own personal income, which will be taxed already, and the company can put into a company pension scheme. There's been a relaxation of the rules on UK pensions, so again, that's another Brucey bonus for you to participate in. Now, what else is there? Well, in terms of wealth planning for the future, if your company is a trading company, for example, then it's possible that they will attract what's called business property relief, and they're going to be free of IHT. You can plan ahead for the next generation. You can pass those shares on. You've got a multiplicity of ways that you can vary the share structure in your company. I won't go into those fancy names now. They're sometimes called alphabet shares, not as in the spaghetti, but in terms of the type of shares, and they have different rights and different benefits attached to them. So folks, then we've got a summary of 7 benefits I've identified at least. There may be more. Watch out for a future episode on that one. But within those 7 benefits, it's really crucial that you've got the right support in your corner so you can take advantage of all the possibilities and all the opportunities that will accrue to you if you're running a limited company. I hope you found this video useful. If you have, I'd love to get some feedback. What are your thoughts? What are your comments? Is there something perhaps in a future video that you'd like me to talk about? If so, let me know. If you found it useful, again, I'd love your feedback, and perhaps share that with others who you feel will benefit. If you feel you need further support in your business, then by all means, please hop onto our website, www.ihatenumbers.co.uk, hit the Contact Us section and book a call. But until next week, folks, I'll see you on the other side.